And the young population obviously are more tech-oriented. They have smartphones. They usually do not have formal bank accounts, and they will have a propensity to use, their devices to do different things, to do games, to do messages, to entertain their social media, but they will also use their technical devices to actually do payments. And apart from the use, there is also the mobile money adoption, regulatory-wise, but also culture-wise, because mobile money is part of the culture now in Africa. There is also the regulatory support. There's been great regulatory evolvements in the past years to actually support this growth of the fintech industry. We also have to recognize that African fintechs have benefited from considerable investment from different, funders, be it equity capital, be it loans, be it mixed equity and loans. So this funding has benefited, quite extensively and supported the growth of fintech in Africa. So basically, in terms of factors, those are the main factors.
Meetings today.
Katika, can you mute yourself, please? The use factor that we discussed earlier, and that you are actually showing it now in this slide, Rashid, is pretty obvious. I've provided already the reason why the use is such a significant factor for fintech growth in Africa. But this figure illustrates pretty clearly, why it is so. For example, in Senegal, which is the first one here in this figure, you can see that actually more than 41% of the population is under 15 as per statistics of 2022. And you see also the growth.
You got on mute, Jan.
Go ahead, Jan. We can hear you.
Oh, you can hear me? Okay.
Yeah.
Yeah, this is fine.
Okay, thank you. Yeah, where did you stop?
Yeah, we were talking about the youth population and how they are contributing in. Yeah.
Okay. It was a quiz also to see if you were listening to me carefully.
Yeah.
No, I was saying that for obvious reasons, you can see why the youth, is a great factor. The young population is a great factor of growth of fintech in Africa. From this figure, you can see that 41% of the population, for example, in Senegal in 2022 was less than 15 years old. And you can also see the exponential growth of this bracket of the population. So obviously it supports and, it goes hand in hand, and in correlation with the fintech growth in Africa. That's why we wanted to put a focus on this factor. And there are also other factors, obviously, that we've already discussed, before this one. But we think that the youth population is one of the most significant one. And you also understand when we will go through the different characteristics of the fintech growth in Africa, you'll understand that there are probably not factors, but other characteristics that also support this growth, like, the population. We've already discussed that, but also the internet penetration. Internet penetration is a big factor, as well as smartphone, everything that goes with internet penetration. The mobile money adoption by regulatory bodies as well as population mobile money is now embedded in the culture, like M-Pesa, for example, in Kenya, Wave and Orange Money in Senegal, Ivory Coast. Those mobile money adoption by population culturally has become like a main characteristic of the fintech African market. Also, everything related the startup and innovation ecosystem. There are like more and more startups, more and more students in technology. So new professionals, new professions, new professionals in technology in Africa. They are obviously pushing everything related to innovation. There are a lot of tech lab, experiencing new products, before they are launched to the public. So it gives an ecosystem for startups and innovation. So the startup and innovation ecosystem has greatly increased in Africa recently by private initiative as well as public initiatives. Now we have like ministries in charge of startups and innovation in a lot of African countries, which shows the importance that the African governments actually give now to startups and innovation ecosystem, strong startup and innovation system. There is also the financial inclusion. That Africa has this is also a big factor. It was in the preceding slide. You have not much discussed it, but the rate of unbanked population is very high in Africa. And the different regulatory bodies have for targets and objectives to actually boost the rate of financial inclusion, which in Africa, seeing the rate of unbanked population, in the formal banking system, the alternative is to push, the fintech, to actually improve the financial inclusion numbers and give access to unbanked population, to payment systems, to financial systems, and to to the fintech world that is considered. And by the way, the regulators in Africa now include e-wallets as part of the financial inclusion statistics, like banked population, under a different category, but they are included in the numbers. So it boosts pretty high the number of the statistics in terms of financial inclusion in Africa and the number of banked population. The investment, I mentioned it, a lot of capital has come into Africa fintech recently. We'll talk about it more, I think. And also partnerships, because fintech goes hand in hand with partnerships with actual formal banks here in Africa in light of the regulatory landscape. Before 2015, there was no regulation, for example, in the WAEMU zone, the West Africa Economic and Monetary Union zone, for fintech. So they were operating under banking license. So basically, they had like a sponsor, a bank sponsor. Now there are new regulation that require like licenses for fintech companies, depending on their activity. But the partnership with formal banks remains very strong. I hope I've answered your question.
No, very extensive response, Jan, and this is quite interesting because when we talk about success of a startup, not necessarily a fintech, but a startup, of course, there are multiple contribution factors. May I request if someone is unmute, could you please mute yourself so that we can, there's no interruption. Because I need to check who is speaking actually. I think this is Jan. Yeah, that's great. Okay, Jan, so another question, because you mentioned about investments. How has the global economic situation, such as rising interest rates or inflation, impacted fintech funding in Africa? Of course, if it is funding, naturally it is associated with either interest or other factors of inflation naturally. So what do you think? How do you think it is impacting the funding in Africa?
Well, Rashid, in terms of funding, as I said earlier, Africa has actually received a number of funding recently. And yeah, and this is actually due to the fact that Africa is now one of the most profitable,
Yeah.
one of the most profitable areas to invest in for the simple reason that the internal rates of returns of investments generally in Africa are one of the highest in the world. Obviously, it comes with the risk proportional to those types of IRR, internal rate of returns. But we've seen an enthusiasm, growing enthusiasm from funders towards Africa, meaning that they are actually ready to take the risk, to get the commensurate benefits, and return on investments that come with those risks. So all that to say that we've seen an increased interest towards Africa fintechs in terms of investment. And as you can see here in this figure, the equity financing of fintech in Africa has increased from 2018 to 2023 in terms of transactions, from 28 transactions to 93 transactions in 2023, with a peak of 141 transactions in 2002. In terms of volume, we observed the same trend from $207 million to 1.2 billion in 2023, with a peak of 2.2 billion in 2022. Yeah, as I was saying, the flood of financing to fintech is easily understood when you look at the returns potential in Africa. As I was saying, Africa is offering the most out of investments of investors in all sectors, fintech being one. And the potential of this market is huge and still untapped, taking into account Africa market characteristics that we discussed, such as the youth population growth, internet penetration up to the last mile in rural area populations, the unbanked population rate. Looking at those factors combined, I personally think that with strong regulations in place now or work in progress, there is great potential for investors in fintech companies in Africa.
This is really good point, Jan, and the reason is, so 2020, because I'm running fintech here as well, so I know the challenges of funding globally. So it started in 2022, the challenges of funding, and 2023 was the worst year of funding. But surprisingly, Africa was growing. Two regions globally. One is Africa, you rightly mentioned, and second is North America. The highest funding 2022 and 2023 different regions receive. And you gave excellent insights. Why Africa? Because usually while I'm sitting in Middle East, I was surprised why Africa is getting so much funding. But I think this is really interesting because investors trust the progress in Africa, the way Africa is progressing. And personally, I remember when yourself, Jan, and myself, we used to walk around in Senegal, other countries, Orange Money and other providers. They're really working at the ground level. It is definitely excellent example. So Jan, moving to the another question, and I think this is interesting one as well. Which sectors within fintech, you can call it payment, lending, whatever it is, are attracting the most investment or funding in Africa, and why?
Well, Rashid, the sectors that attract the most investments Thank you for showing this slide. It's basically for the countries that have regulation in place and that have allowed banking and lending tech comes first. But please bear in mind that not all African countries have regulation that support lending tech yet. But there are labs like fintech labs, such as the one in BCAO, the Central Bank for West African States, that actually monitor the innovation, product innovation in the fintech Africa fintech market of the West Africa region, sharing the CFA franc, the ZOF, and adapting the regulation, to support the new products. But for the countries that have allowed lending tech, it comes first in terms of number of transactions, followed immediately by payments. But in terms of volume of financing, we have the opposite. Payments received more volume of financing then followed directly by banking and lending tech.
Okay.
And yeah.
Oh no,
Yeah.
excellent. I think this is a good point, Jan. So these are some statistics of how payments merchant focus, because when we talk about payments, it's not just typical your payment gateways or cards. Of course, any form of payments. In fact, remittance is part of payment as well. So I think this slide is self-explanatory. The way payments is the most highest receiving funding
Yes.
in last previous years. So I think this is definitely very clear. So Jan, I
Yes,
have another.
and yes, and as you said, yes, it's good also to know the infrastructure of the payments in Africa and which one attract the most. As you can see here, thank you for showing this figure. We'll briefly go over it. Yes, within the payment, you have obviously the merchant-focused payments that represent 50% of the financing received out of the 2.6 billion financing received specifically in payments in Africa since 2018. 50% were allocating to merchant-focused payments. So it can give also a perspective and an idea of the audience of the structure of the payment system in Africa. Merchant-focused payments are very prominent, and this is a very good reason. This is a very good reason. The very good reasons that we have developed earlier are actually the very good reasons that we have developed earlier are actually supporting this interest because of the unbanked population, the youth population. Obviously, when they want to do merchant payment, they will not necessarily use banking cards because they are unbanked. So this is all tied into what we've said earlier in terms of the characteristics of Africa FinTech.
Excellent. So I'll pick one small example from this slide. Jan, you rightly mentioned. For example, if we talk about merchant-focused payments, I'll pick one small example, that is PayMob. Now, PayMob is a very big Egyptian payments company, and they are different verticals. They have merchant and they have retail payments as well. But the interesting part is, although they are they have very strong network in Africa, including Egypt, they do not have very strong presence in Middle East. And I had a conversation with PayMob, it's been a month now, and they wanted to expand their operation not just in Middle East, but South Asia as well, like for example, Pakistan. So they engaged with local banks in Pakistan, they're interested. So one interesting question is, why would now African companies are interested to expand their operation outside Africa, not necessarily only Middle East, but maybe beyond this as well. So what are the prerequisites if African fintech company wants to go beyond Africa, not just Middle East, any other countries? So what do you think, what is required?
Well, Rashid, I will start by actually providing the decor. And if you can show, I think we shared a slide where you can see how Africa fintechs have expanded already. They've already expanded within Africa. It's the next one, Rashid, please.
This one, yeah.
Yeah. No, the previous one. Yeah, you can see here in this slide how Africa fintechs have already expanded extensively within Africa, and some of them like regionally, and some of them even globally. Why globally? Because they receive funds and they are initiated, for example, from Silicon Valley, you know, like Wave, and then they expand to Africa, you know. So basically they are tied in, you know, with funding globally, and they expand regionally, you know, in terms of transactions, you know, in terms of activity, operations. So operationally, exploitation, as we say in French, they actually expand already, they scaled up already regionally. And in terms of funding also, source of funding. So from that, I can say that they are ready to expand, but they have to make sure that they take into account, you know, those readiness tests. Like they have to ensure that, you know, they have proven product market fit. You know, they have to demonstrate strong product market fit, you know, in their home base and in the region where they scaled up, you know, before thinking of exporting, you know, those products, you know, to the Middle East. There is also the regulatory aspect. We have pretty different regulations, obviously, between Africa and the Middle East. We know that the Middle East is more, has also a strong Islamic finance, even if, you know, not only, but they have a very developed and sophisticated Islamic finance framework, which Africa is pretty new in. This is only one aspect, but also in other aspects of the regulation, like currency regulation, there are differences that the African fintechs need to actually be aware of, assess, and do like preparedness tests before trying to tackle this market. The scalability and adaptability needs to be also reviewed from what they've experienced already regionally and globally for those who have actually scaled up already regionally and globally. But they have already proven that they can do it regionally and globally with financing, but they need to actually assess, you know, the scalability and the adaptability to the Middle East,
Okay.
Also, they have to ensure that they have strong partnerships over there, because obviously they cannot just go there by themselves, not knowing the market. They will have to tie in with Middle East fintechs, so they will have to ensure about that. They will also have to ensure that they have adequate capital and resources for actually expansion of their activities to the Middle East. And this is where it could be interesting for them to actually raise funds with funders in the Middle East, make ties with funders in the Middle East, and also make technical partnerships. And why not, beyond the technical partnerships, if some fintechs can also finance in the Middle East, I mean, finance the expansion of Africa fintechs over there, that would be, I think, a very great jump. The customer trust and security, I think, will be taken care of by strong partnerships with present fintech in the Middle East, that are known by the population. So all those aspects are very important to take into account before an African fintech would move to to the Middle East, I think. But now, Rashid, I think you will tell us more about because you're in the Middle East, so you can tell us what would be the interest for an Africa, for a Middle East fintech to partner with an Africa fintech, So yeah,
Yeah,
that would
yeah.
be
Thank you so much, Jan. So
yeah.
definitely very interesting because you've already set up the foundation, and foundation means in Africa foundation is there. And I think one slide I would particularly would like to mention this slide, where we see Airtel, we see Wave, we see MTN, and some very big name, M-Pesa, Hello Pesa, etc. And these big names are financed by MasterCard, Visa, and big VCs as well. So I think trust is very much there. And these VCs and financial institutions, they have global presence. So funding is the key, you rightly mentioned. Now, if I move to this slide is a very clear indication starting from 2010, and now we are in 2024. Even if you see the slide 2022, you see extensive funding starting from 2018, 19, and 20, that is COVID-19 period. So COVID-19 changed the mindset completely, especially in Middle East. So we see COVID is there, but institution, fintechs, even regulators, government, they had this opportunity to progress with digital financial services. So digital financial services, I would say 100x growth in Middle East during COVID time. And of course, growth does not come just with an ambition. It comes with the plan, it comes with the product, and it comes with the financing. So for financing was significantly increased. If you see 2022, although 23 was little tough, 24 is fine. But if you see 2,282 million US dollars, it's huge investment only in Middle East. And when I say only in Middle East, I'm talking about Saudi, I'm talking about Qatar, I'm talking about UAE. These are the three main countries that are contributing significantly in financing. So financing, huge financing in Middle East, in the region. So that is definitely, so financing is just not to finance Middle East players. No, that's not the purpose. Financing is to finance other players globally as well. So last year, if I see local homegrown fintechs is maybe 10-20%, but mostly fintechs that are outside UAE, from China, from UK, from Russian states, from CIS countries. So they are, of course, China, as I mentioned already. So these are the regions that are extensively uh, 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 moving towards the Middle East. So one is investment. The second most important thing is the existence of regulatory frameworks. In last 3-4 years particularly, or you can say 5 years, the way regulations evolve in this region, not just fintech, but financial services as well. Fintech is very prominent because this is relatively new. But if you see these slides, only in UAE, 5 regulators that are regulating financial services, whether it is central bank, whether it is Dubai Financial Service Authority, whether it is FSRA, whether it is ASCA, whether it is VARA. So these are the regulators, they are regulating financial services, common financial services such as payments, such as virtual assets, such as asset management, etc. So if you have in one country 5 regulators just to regulate same service, imagine the level of growth. 40 to 50 companies last year registers in UAE to apply for VARA license at different stages and different products. The same way Saudi is progressing very well. Saudi is the second country in the region that introduced open banking. Open banking is only 7-8 countries they are offering open banking globally, but Saudi is one of them. And then definitely Qatar is growing very fast, like exponential growth in Qatar. They have adopted the similar model UAE adopted, that is free zone and mainland. So in UAE and Qatar, they have free zone, they have mainland entities. Every entity have their own jurisdiction. And the most prominent regulation that is issued in coming days is, of course, payments and remittance, I would say. Crowdfunding is one of them. Unfortunately, as you rightly mentioned, in Africa, in several regulations, it is not allowed. But in this region, there is exponential growth in the digital lending. So, of course, it is one. So, regulatory framework and establishment of regulatory framework contributing a lot, significant contribution from the regulator. Then one interesting part is a cross-cutting regulatory framework. This is an interesting topic. Why? Because we cannot establish an ecosystem just based on a regulation that regulate a product. You need cross-cutting regulatory frameworks, such as you need data protection framework. I remember when I was drafting open banking regulation for Saudi Central Bank SAMA, we had one challenge, and the challenge was that there were no very strong data protection framework. Although there was a data protection regulatory authority, but framework was not there or not issued. So that was our main showstopper to implement open banking framework. So open banking, then consumer protection. Consumer protection is because of fraud related matters. It is again cross-cutting regulatory framework. So if you do not have cross-cutting regulatory frameworks, you won't be able to introduce, develop and launch new products. This will not support. In digital world, you need this electronic KYC. So Central Bank of UAE, I think it's been 2 years now when they issue electronic KYC regulation because of these challenges, because of multiple practices. So these cross-cutting regulatory frameworks are it's a prerequisite to progress. Then so three main pillars to progress to establish a very sound fintech foundation. One is, of course, product related regulation. Second is cross-cutting regulatory frameworks that we discuss here. And the third one is regulation that help innovate. Regulations that help innovate. So fintech is about innovation. Regulators do not know what is this. If they are unable to establish those frameworks, they won't be able to test it. And of course, then they have to live with those legacy regulations and old school frameworks. So what here regulators does and did actually, they introduce sandboxes and innovation offices, fintech offices. So if you see here, the most progress you see in Abu Dhabi Global Market ADGM, they established sandboxes. So those fintechs, they who want to really test their product without having solid regulatory support, they have this opportunity to test their product along with the regulator. This help. So sandboxes is one of Bahrain is definitely there. Dubai Financial Services Authority is there, and then RegTech technologies and SupTech technologies. I remember that when we were training Bank of Ghana, Central Bank of Ghana, a few years back, one of the questions discussed by Central Bank of Ghana: what SupTech? What can we do? How can we use this technology to regulate entities? It's a challenging thing. Now, if you see here some performance and progress from or responses from the participants from the fintech, you will see this is very interesting number. Why? So 42% participants of fintech and financial services, they do believe that regulators here in the Middle East, the way they drafted their regulation and framework, it supports simplified customer due diligence. It supports simplified customer due diligence. Why it is very interesting? Because I remember, Jan, we had a conversation with Central Bank of Gambia. Now, Central Bank of Gambia, we were discussing about simplified due diligence, and they said simplified due diligence, we don't have anything. We don't have anything like simplified due diligence. Then what we did, we picked one paragraph from their regulation and we shared with them, you have at least some provision in your regulation in relation to simplified due diligence. So you can introduce this control. And they were really surprised. So sometimes provisions are there in the regulations, but maybe regulators are not aware of those provisions because someone else drafted those regulations. But in this region, there is a strong provision of simplified due diligence. Minimum KYC, collect from customer and offer your services. Then streamlined product and services approval. So additional product and service approval, it is there. Regulators are very active. Regulators are very active to issue new product and services. It is happening. Regulatory support for remote onboarding. Now it's all digital. UAE, every financial institution is onboarding customers digitally. Not just retail customer, it's corporate customers as well, your professional customers as well. Like recently, so in UAE, only in UAE, if I'll give you one example, only in UAE, there are 45 public registers or public entities that register businesses. So usually in countries, there are 1 or 2 registers. In UAE, 45 registers. So the government of UAE took an initiative and they consolidate all registered at one place. Now you have one portal available, you can access this portal and you can get your company information verified. So it is available there. So I think regulatory, the way regulators are progressing here is definitely self-explanatory. The last point from my side, Jan, is bridges among regulatory authorities. So here, DFSA and ADGM or Central Bank of UAE, they have very close cooperation with international global regulator, whether it is FCA from UK, whether it is MAS or MAS from Singapore, then Malaysian regulators. Through Indian regulators, they recently launched J1 card. J1 is India specific card scheme that is launched in UAE. So this is because of the close coordination with the regulators. And when you have a close coordination, definitely you support innovation. So I'm not going to spend too much time on because we are short of time. But yeah, so that's my view is the market is really the landscape of Middle East actually give strong opportunities for fintechs in Africa to come and launch your services, not just regulators, but fintech operating in the region. And myself, Jingle Pay, we are one of them. So we partnered with so many companies, to African companies, to expand their operations in the Middle East. So yeah, that's my view is if definitely fintech companies from Africa, definitely they are very much welcome. There are something that we need to consider, preparation and the prerequisites to launch their services, but potential is there. Any final thoughts, Jan, before we move to the question, because I'm receiving several questions and we are short of time.
Yes.
Yeah.
Thank you very much, Rashid. I think you brushed pretty well the picture of how the tie can be made between Africa and the Middle East in the fintech world, technically as well as regulatory. I think regulatory is a main point. So yeah, I'm wondering if if we really want to push, if fintechs really want to push, coming together. Yeah, if they should not think about initiatives to have, the players and the regulators talk to each other and see how those bridges can be actually effective between the different regulators in Africa and the different regulators in the Middle East, because it's many countries at stake, both from the Africa side, the Africa continent, and the Middle East region. So yeah, thank you very much, Rashid.
We have few questions from I know because of time limitations, I won't be able to take all the questions. But the one question we got from the participants is, with both Africa and the Middle East facing challenges in cross-border payments, how can African fintech provide innovative solution to address these challenges and enhance financial inclusion? Yes, Jan.
Well, I think that we have discussed this. We have touched, at least we have touched on it during the presentation. I've mentioned that culturally, fintech, mobile money is embedded in Africa payment and economic culture now. So basically, we have to assess, the cultural integration of mobile money in the Middle East, and see if there are some gaps, how to use the African experience to actually push towards embedding even further the fintech culture in the Middle East population. In terms of economic differences, as we said, well, those readiness tests have to be done before expansion of Africa fintech to the Middle East, and through those strong partnerships, that we have mentioned earlier. So basically, it's only through those strong partnerships between players of the two regions that those challenges, cultural, economic, can strategically be overcome.
Excellent. Last question. I think I'll take this question because it is related to Middle East, and the question, maybe I'll read the question for the participants. The Middle East has a diverse regulatory environment. Yes, we discussed it. What are some of the challenges and opportunities African fintech may face when navigating the regulatory frameworks in the region? So I think one interesting fact is, typically African countries, and in fact not just African but other countries as well, they have one single central regulator that regulates more or less everything in the country. Middle East is different because to regulate one activity there are multiple regulators. And it's not just Middle East, but like for example, when I used to work for Japan financial services institutions, I faced the same situation in Japan as well. But so one thing is, when African company decide to move to Middle East, they come with a mindset and preparation that they have to face multiple regulators, and they have to pitch their model to multiple regulators, and not just regulators, but even sometime investors here act like a regulator. So it is very important to roll up your sleeves and get ready to face tough situation. Opportunity is there, but opportunity does not come without a cost. So one important consideration. Second important consideration is, and from cultural perspective, Jan and others, is a complete different mindset of Middle East, Arab people especially, and Middle East is very much agreement and contract driven. You talk, you speak, you should be a contract between two parties, ideally written, but there must be a contract. Other part of the world, things are not very much driven through contract. Therefore, when you bring contract in and different forms of contract in, it means your processes will be impacted. I'll give you one example is consent management. It's a very hot topic in the Middle East. Did you get the consent of customer before giving something? Did you get the consent of customer? So consent management is part of a contract. So here, when African fintechs wants to operate from Middle East, they should be contract savvy, I would say, not just technology savvy, but contract savvy. They should train themselves, speak in terms of contract, write in terms of contracts. This will significantly support them. And the last thing is quality. Quality, whatever you offer, quality means including trust, definitely. Whatever you offer, if quality is there and this quality help build trust, you are successful. If you are offering something that is not up to the par, the quality is not whatever your services are, whatever it is, it could be just your onboarding experience. Let's suppose it should be your UI UX of your application. If there is no quality, you won't be able to build trust among the customers, and then you will lose the market very quickly. So trust and quality really matters to operate. So I think if there are very few prerequisites to operate in Middle East market, if it's there, definitely the chance of success are relatively high. So yeah, I think that's it from my side. Anything else, Jan, before, because we are almost over time?
No, Rashid, just to ask if there's no chat to see if people have left some comments that we can
Uh,
answer, since
um,
we cannot take all the questions. But okay, that's
yeah.
fine. You can just go ahead.
Okay. Okay. So I think that's about if I conclude this whole discussion in few statements, uh, I would say African fintechs are growing a lot, but we from outside Africa, we do not see this growth. We do not see this growth is not very visible, especially people sitting outside Africa. So there is an opportunity for African fintech to showcase their progress and growth to other regions of the world. I've seen some very interesting, very innovative model in Africa that we in sitting in Middle East we don't know. So we can learn a lot from African, especially financial inclusion perspective, I would say. Mobile, you mentioned rightly, Jan. And from our perspective, I think we should be able to welcome those fintechs and help them progress here quickly, to support them from regulatory front, to support them on financing front, and from cultural aspect as well. If we can do this, definitely there is a win-win situation for both the regions, and we can progress well. So that's it from my side. I really appreciate. I see we have quite a long list of participants today, and excellent participation. I'm really thankful to participate in this event. Jan, he is the expert, not just Africa, I would say, but he is expert of financial inclusion as well beyond Africa. So if you guys need any support, your companies need any support at the level in terms of financial inclusion, risk management or compliance, definitely digital financial services, he is the man, and definitely he and his company can support. From Middle East perspective, definitely we are here, whether it is digital financial services, banking licenses, financial service licenses, go-to-market strategy, and there are of course several areas. We are here to support you guys as well. Thank you so much. We'll be sharing
And
the recording with you. Yeah, I'm sorry.
and Rashid, if I may allow, since we didn't have time to answer many questions, um, please feel free. I mean, I think that going from this webinar, we should start brainstorming about a Middle East Africa,
Yeah.
fintech initiative, where we will start thinking about regulation, so that at least this webinar does not stay, a empty letter or just a letter in the wind. So we can start thinking regulation, product, companies interested in both markets, from Africa, interested in the Middle East, African fintechs interested in the Middle East market, and Middle East fintechs actually interested in Africa fintech. So I wanted to suggest if you can, with the participants, like do a mailing list with our contacts, so that with all participants in the mailing list. So if some want to ask questions, in the next couple of days, we can probably make ourselves available to
Yeah.
answer those questions for them, let's say for the next 5 days, for example.
Okay, great. Thank you so much, everyone.
Thank you,
Thank you, Jan,
Rashid.
once
Thank you.
again,
And
and
thanks
really
to all
appreciate.
participants.
I wish everyone have a great day, great evening, good night, and I hope we'll see you again. Thank you so much. Bye bye.
Thank you, Rashid. Thanks to all participants. Bye-bye. Thank you.